Well, good evening, everyone. Welcome back to the channel. Apologies, we're a bit late, but what's new? Still working on that. So we got a few of you that were waiting here. And G-Man says, hello, coach. Cristobal Cardona says, well, 10 p.m. is here. Okay, everyone, so we're going to be live in
Something just wasn't right.
Hold on a second here. Mute that. So we're live in the Discord, and I actually have the comments up over here to the side. So we'll be able to see the comments, and we'll see the Discord and my screen over here. So really, just wanted to cap off what's been a really successful week for the channel. Really exciting. We had 2 fund managers on, which is, of course, never happened before, and had a good podcast with a really good guest. Capital Mindset, that went really well. So yeah, lots of good things happening for the channel. Of course, we're going on the Cash Flow Kings tomorrow. Looking forward to that. And all in all, the market did really well this week. So, things are going really well. So welcome here. We got Richard King, not the first one, but you can't win them all. And Chuck says hello. So you all are welcome to join the voice Discord and chat with me on the live voice Discord if you all want. Otherwise, we will go over, some successful trades this week. Like I said, I was able to roll the Mara trade from last week, and was able to finally close that one out for a nice gain this week because of the Fed announcement. Of course, like I say, Papa Powell is excellent for juicing the markets, and so got out of that one, got into some puts on Crocs, which generated some nice premium, of course. All in all, I think we ended today a little bit on a down note, but can't complain because, of course, we were up so far for the week. And just in general, we've been up so far in the market. Okay, so here is Yahoo Finance. So we had on Sylvia from Defiance. We were supposed to have her on Monday, but it turns out she had a little bit better offer. She had to go on Fox Business instead, according to, what she told me. I was afraid like another YouTuber or someone got to her and said, hey, don't go on that idiot's channel. But thankfully that wasn't the case. But anyway, so we had her on yesterday afternoon, which went really well. She actually put us in contact with some other fund managers that should be coming on within the next couple months or so. And then we had on Curve Funds, and so the Curve guy was really interesting to interview. He really seemed like he knew his stuff, and the people there were really on the ball. They got back to me quick. As soon as I had reached out to them, they were wanting to schedule a live show. So had him on here. I'm actually having another one on the first week of April, and then we're going to have both of them on the podcast as well. That's the goal, anyway, to give a little inside baseball here. Okay, so as of today, yeah, S&P was down slightly. The Dow was way down, but who cares about the Dow, right? I thought it might hit 40,000 today, but then it ended up dropping. NASDAQ up 27, Russell 2000, still above 2,000, by the way. But it was down almost as much as the NASDAQ was up. So let's look at, I haven't been talking about YieldMax as much lately, but let's look at Ulti, our favorite new fund, right? Now, after talking to a lot of different fund managers and a lot of different people and stuff, I'm kind of on the fence myself, with some of these high dividend yield investments. I have to say I really don't think they're the greatest. And I honestly think you're better off in the indexes. And we're going to get into that too. I'll show side-by-side comparisons. Ah, there's Mr. Cardona. You came back. See? You couldn't do without watching the coach, right? So the Roundhill ETF people, I don't want to give everything away. There's a lot of, how can I say this? There's a lot of channels on here trying to do the same thing and stuff, and I don't mind collaborating and helping out and stuff, of course, but I like to let things play out a bit. So, but yes, to answer your question, they will be on at some point. So what I would recommend you do is submit your questions to them in the Discord, because believe it or not, we were really light on questions for the Curve folks today. Really light on questions. We only had a few of them submitted in advance. So it seems like you all were pretty happy with the interview that I did, but I had to come up with a lot of questions on my own, which, not to say that I keep asking you all for questions so I do less work, but that is kind of a perk. But a lot of what I asked was I either kind of came up with either on the fly or slightly before, or during the natural course of the interview. But it went pretty well. And I liked that he gave thorough answers, so that helped me to literally go from question to question. And while he was answering, I could say, okay, let's ask him this, or let's ask him that. And then we got live questions from the audience too. But I definitely would like it if you all could kind of step up on asking more questions in advance. And definitely, I guess it's going to be a long process to get everybody used to the Discord live streams, but I'll probably have to schedule them regularly too. But I would definitely like to have a lot of you all in the voice chat for sure, so I'm going to kind of shamelessly solicit that until we get at least 5 or 10 of you on regularly. Okay, so I see your feedback on me and the Curve spokesperson. Yeah, I'm glad that you liked that. I'm glad it went well. Okay, so in the general chat here, we got some feedback on the podcast. So I try, in case anybody wonders, I try to be a little different on the podcast. I'm a little more free-form speaking and all that. I try, when I'm on this channel, I try not to get as much into like drama and other channels and stuff like that, but we kind of do that a little bit more. And we had an interesting discussion with Capital Mindset on Wednesday, which actually got posted today. What did Mr. Cardona say here? Roundhill will not be paying in March, waiting for Misty. Oh, that one's going to be huge. Okay, to Elaine Legault, are you in Discord? So all you have to do, if you see the screen here, you have to go to the bottom left of Discord where it says voice or live show and voice channels, live show. You see me in the green. I'm voice connected right now. So all you'd have to do is click on that, and as long as you have a microphone and a sound system on your computer, not a sound system, it's not that advanced, but as long as you have like a headset and a microphone or some kind of headphones, you should be able to participate in the live show. But anyway, yeah, so we got some good feedback on that podcast. That's in the Discord posted here as well. Good feedback from you all in terms of the interview with Curve Investments. As far as the Discord, we've gotten some pretty good growth in Discord as well. Let's see, 176 offline, 8696, 206. We're up to like 212. That means we lost one. That means somebody, and I figured this would happen. Somebody probably listened to our podcast and left. Because I'm not going to lie, we definitely share audience with other channels. I know we're all supposed to kind of be one big happy community on here, but not everything always works out by the book. Let's see here. Oh, that reminds me, I've got to get on this here. Fidelity. If you have a Fidelity account, you can partake in options play. I think it's discounted at 33% if you're a Fidelity customer. Of course, if anyone's been banned from other Discords, we have this thread over here. The wheel strategy, we have these people in this thread are posting their awesome trades. They're making lots of money. I'm sure they'll update us on that if they haven't already. We have sub-threads for questions for all the fund managers, Curve, Rec Shares, Roundhill, Defiance, and YieldMax. Video ideas, if any of you all have any video ideas for the coach, of course. We started a new one called Polls. Video ideas. I got to get back on some of this. I've been so busy interviewing fund managers, I've kind of slacked on some of my other stuff. Oh, prospectuses. We're supposed to post some prospectuses here, or is it prospecti for plural? Important dividend date. So we've got all these cool sub-threads here in the Discord, not just the general thread. Anyway, let's go look at, since you mentioned Misty, let's go look at that one. So Misty is up to, actually dropped today by $2, 38.10. Yeah, so we've almost doubled since February 22nd, but again, that's because the underlying has been on a tear. So if we look at MSTR, which is the underlying, it has been on an absolute tear. We're at 15.23. Redfish has a question. Well, being that you have a question, hopefully, I hope I have an answer. Does anyone know if dripping these funds, what it's based on, X date, record date, or closing price on pay date? That's a good question. I stopped automatically dripping in 2020, And the reason I did that is because a lot of these funds were hitting all-time highs. So because of that, I didn't want to keep dripping into the stocks I was in at 52-week highs. So I decided to just have the money paid into my account itself. And let me see something here. Oh, I don't want to do that. I'm trying to expand the chat here, actually. Oh, well. Okay, so interesting now. I'm trying to get the window up here so it shows like all the chat history here. Let's see what I can do here. Pop out chat. Oh, perfect. Here we go. Perfect. Now we're cooking. Let's see. Bear with me here. We're still getting acquainted with doing a live show here. Okay, that looks like everything. Oh, we're kind of light on comments, actually. How about that? All right. So let's see here. Yeah, so see, since early February, this fund has 3x'd in value. See where we are there? We hit 1770. We're 6 away from 1776. It's above the 1-year target estimate, but just so you know, all of you all that are really excited about MSTY, it's doing really well, but it has a lot to do with the underlying. So let's see here. Let me... Sonia's on. Hey, Sonia, how about joining the live chat again? A lot of people like hearing from you. All right, let's see now. Okay, so Seeking Alpha. Seeking Alpha. So I have the window up that I actually discussed with Mr. Sheng Chow of Curve Funds, and I pointed out, and I like to do this for every fund manager, I pointed out that almost all of them have a positive return, okay, except for TSLP, for obvious reasons, and AAPY, because Apple stock has actually been flat. But you can see, since the beginning of the year, there's been a wide disparity. Yes, Sonia, you have to go into Discord. Okay, so there's a wide disparity here. NFLP was our top one, and I think it still is. Yeah, it still is. So see, Tesla's at the bottom. If this is like a horse race, it's in last. NFLP's first, followed by Amazon, Microsoft, Google, Apple, and Tesla are in the negative. Alright, so let me clear this one out. So clear this one out, and then we will go over here. And I want to pull up MSTR. I want to illustrate a point here to you all. So MSTR in a year is up 517%. MSTY just went public recently, and I think they picked like the best possible time that they could have gone public with this one. Okay, so what I want to point out, over the same time horizon, this actually isn't as bad as I thought. You're better off in the index, okay? This is good though. Okay, so if we do happen to get a $5 dividend, what's going to happen? There's going to be a ton of YouTube videos that come in and say, hold on a second, hey, Pay the Piper, I see you on. How about joining the live show? Come talk to us about your wheel strategy. You'd be a great guest to have on. Let me message him over here. I like having the chat over here. So, funny thing, and this was like a running joke for a while, but when my channel first started to take off like a year ago, a lot of you used to tease me because when you all started discovering like the super chat feature, you all started like really super chatting me when you got excited about your yield max dividends and stuff, back when we thought it was like an infinite cash cow. So I would make a joke, I'd say, hey, that super chat button works. Well, now I'm going to be the same way probably for the next month or two when it comes to people joining the live Discord, just until we get familiar with the process, because that's something, you know, I really want to ramp up on this channel, of course, but I think a lot of you that are joining may not actually be familiar with Discord. So it just takes time. It's definitely something to learn for sure. Okay, so the point I'm trying to illustrate here with MicroStrategies is the index is outperforming the underlying. Okay, so what's going to happen if they do happen to pay a $5 dividend? There will be a ton of videos that are going to say, that means that's a $60 annualized dividend yield, right? So that's $60 on a fund that's currently trading for like $39. So here's what's going to happen. It's going to be the same thing as when Tesla first started. Because a lot of channels on here, I hate to say, they chase views. And when you have a fund that pays a $5 dividend per month that's up 80% without doing any critical thinking or really any in-depth analysis on that, that is going to be the headline. And of course, headlines sell. 80% up in price return with a $5 dividend per month, which is like 153%. So I guarantee you're going to see probably hundreds of videos. And I won't even rule out that I did it as a joke. And honestly, if you all go back and look at my older videos, when you see 70% dividend yield in Tesla, I did say that, and technically on paper it's true, but it's an eye-catching thumbnail that happens to get views. I'm not going to lie about that. I had someone that went over to Khmer's Discord and was like the #1 fan there for a while that called me out for that. Said, "Oh, coach, he's just chasing views." No, it's not that. What I'm actually doing from a strategy standpoint is that thumbnail gets views, people join in, and then I'm pointing out, hey, yeah, this is paying 70% on paper, but look how it's doing that, right? Okay, so, and I can predict, without even using the advanced equipment, I can predict that MSTY, it's up 80%, it's going to end up paying whatever, 153% to start with. It's going to have a ton of money flow into it, tons of videos flooding YouTube about that. And then what will happen? The NAV will start to erode, right? So we're at 38. And keep this in mind, by the way. Every time that dividend comes out, it's at what, 39 right now? So if we do get that $5 dividend, it'll be down to $34. And then, you'll have the same video saying, oh, it's at a cheap price, go buy it. Okay, so then you go buy it. And honestly, I've kind of seen this movie before. Okay, we could make a little bit more of maybe an excuse for OARK or for Tesla because they were the first two, but we've seen this already. So I can predict that the same thing is going to happen over and over again with these and each one. Not to bash them, because some people think that's bashing. Some people think, when you kind of plainly state the truth, that's bashing. Anyway, let's do some more comments here. Well, I think Sonia's trying to join, but she's figuring something out. Pay the Piper, we'd like to get you on as well. Dissector said, well said. Good, thank you. Curve seems legit, great interview. Easy D says, you demand. Thank you. Thoughts on Ryan Dingler? I'm going on there tomorrow, actually. So, it was funny, there was a little bit of a mix-up a couple days ago. I posted a video on there, and I guess one of his admins kicked me out. And so I messaged him, and I said, hey, what's going on here? I'm supposed to be on your show Saturday. How do I get kicked out? And he was like, oh, no, it's a big misunderstanding, because I guess they thought I was like a hardcore yield maxer, and I guess they don't really want hardcore yield maxers. But while I do invest in yield max, I am objective about it. Let's see. After your interview, do you agree Curve is way better than yield max? I think you liked yield max more. My stance is complicated. It's not that simple. It's not like I liked yield max more. I put a poll out. You wouldn't believe. So some of the comments I'm getting. So this is tricky for me as a YouTuber. This is like, it's almost like politics in a way. It's like if you're on one side or the other side, you're trying to straddle the line. You want to get, you're going to be towards one side, but to win or to grow, well, growing on here is equivalent to winning, I guess. But you've got to get a piece of people from the other side, and you want to get a lot of people in the middle too, right? So my stance, like, the bulk of my audience over the last year are yield max people since I started talking about it, right? Sonia, hold on a second. You were in Discord. Just join in the live chat. What'd you comment here? Curve seems more interesting out. Anyone buying any of these? Last I bought was NFLP. Well, Sonia, just buy them all. I mean, you've got like plenty that you're taking in per month. Like, just just buy them all. Not advice, by the way. Keeping an eye out for the index funds. Yeah. Let me do this. Okay, so where was I? I was in the middle of a rant here that I was hoping was going somewhere. So, the yield max stuff, I feel like at this point I put too much into yield max, and I'm kind of knocking myself. I was actually looking at my purchases back in like August and then October, and I was kind of shaking my head at myself. I was like, why did I buy Tesla at $14, you know? And so I'm looking now and thinking that, yeah, Curve, okay, it's a lower yield, but the NAV is more protected. So I've said from the beginning, I've never recommended everybody put everything into these funds. And every fund manager I've had on, I say the same thing. I ask them the same thing. I say, hey, do you like, how do you see people investing in your funds? Do you see them putting everything they own into these funds? And most of them, you know, they're kind of like politicians. They straddle the line with an answer, and I don't really get a clear answer, but or they go into like what I call fund manager speak, and I have to go back and watch it 2 or 3 times to understand what they actually said. So, yeah, Curve, I feel like it's going to be the same strategy, and I'm starting to think that, you know, if you know how to do options, you can just about do this yourself without even buying the fund. Because what's the point of buying into the fund? The fund, like Shang said today, the option strategy with the synthetic, it replicates the long position, right? But you don't actually own the long position. You own a derivative of the long position. So, like I show with the indexes, you're better off, you know, owning the indexes. Let's see what yield max just profits from the headline. Well, that's the thing. I mean, you see this in life a lot. There's not a lot of, like, I guess, critical thinking out there. People just say, oh, look at this 70%. Oh, you know, so-and-so told me about this. Let me go put money into it. It's almost just like getting your car fixed. Like, you go try to find a mechanic. You ask your buddies, and someone's like, oh, hey, yeah, I go over here. And the next thing you know, and I've had this happen myself, so I speak from experience. Next thing you know, and I'm not a car expert, but I can figure out pretty quick. It's like, oh, they charge for this, they charge for that. They ripped me off. So I won't go back there again, and I may even write a Google review too. So yeah, I would agree. I think Curve is more stable. Sylvia, come on, Sylvia, just join the voice chat. You did it before. Curve's methodology is way better, captures more upside. I agree. If you look at, I think I still have it up here. If we look at the Tesla position, not Tesla, but TSLP. By the way, they have a frequently asked questions section that's really good. So the distribution rate is 17%, which I know a lot of us are spoiled when it comes to dividend yield. We're spoiled with 50, 60, and 70% yield. But 17% yield, historically speaking, is not bad at all. It's on par with the SFOL. And by the way, anybody that wants like a dividend income, I don't like advise or recommend, of course none of this is advice, but I don't like the idea of having so much money in one fund, but I like to mention, say, the $1 million net worth, okay? 10 to 20%, say you put it in like SFOL, say you put 100,000 in SFOL, you could take in like 18 grand on $100,000, and it's stable. It doesn't really move. So if you put like 200,000, you get 36,000, which isn't like a great income, but that's still $3,000 a month. Like if you get to where you own your house, you pay down your debts, $3,000 a month is not bad. I mean, you could live on it if you had to. And mind you, this isn't like, you know, you're just like sitting at home, you're living cheap. You could be doing other stuff. If you retire from work, you could be day trading. You could be doing all kinds of stuff to make side income. Let's see here. Sonia says, there are a lot of ways to make money in the market. I love the big dividends, but I have a little SCHD and JEPQ. Just to further convince myself it's not my cup of tea. This isn't a cup of tea either, by the way. I'll give it some time, though. Orion says they post their trades. Is it possible to just copy that? Actually, someone said they did that. So if we go over to Ulti, somebody, I don't know if this is a great idea or not after some of the videos I posted earlier. Let's see here. But someone told me they copied a trade from Ulti, and they took in a few $1,000s in premium. I don't know how much like they put in or how much they had if they're doing a cash secured put. But like say ARM, for example. So ARM, as opposed to leg. They did like, like a cash secured put or something, and then maybe a covered call. And so they tried to replicate the trades here, and they said they took in a nice premium. So yeah, I think that's absolutely something that can be done. Let's see. After the info I heard this week and performance of QQQY since the start, I sold QQQY, JEPY, Clip, OARK. I kept Coney and TSLY. Really? You kept TSLY, huh? With my sales, I bought SVOL. SVOL's not a bad one, I think. Dissector says, why do you own high-tie? I'm about to start a position. Well, so Blake told me about it. I had never heard of it before. So let's look at high-tie since you brought that one up. I really like it. For one thing, it's cheap. So this is a stock. I look at it like a penny stock. I look at anything under like $5 or $10 as a penny stock, even though it's not pennies. It's cheap. So the one concern I had about it was this. Okay, when we had the meme stock market back in 2021, back when all the stimulus checks and all that were going out, and I asked Blake about this, and he had an answer for it. I forgot what it was already. But the high-tie stock went all the way from $6 to $10, and then it crashed from there. So if you bought in here, you would be absolutely holding the bag. And we discussed this before, and he said something that made sense at the time, but honestly I forgot what he said. But anyway, since the last year, you can see that it's like doubled in value. It's went from like 111 to 184. That's a pretty significant gain. By September, it was up to 205. I bought in. I've got a few thousand shares of it actually. It's a relatively small position in my account, but I'm up like probably $500 in it, and I did leap options on it too. And the leaps are up as well because they just had earnings last week and they got a little bit of a bounce. So the leaps are up as well. So really, I would say Blake's thesis on it, I agree with. He thinks that we're in an election year. One side is probably going to pull out all the stops to win, and one of those is going to be they're going to try to legalize the green stuff. So if they do that, it's going to be a huge, huge boost for this stock. And he's explained, and he's gone over this in detail, how they have the infrastructure and they're well positioned to handle legalization of said green substance. And when that happens, he expects them to take off. And I think it's a really valid thesis. And so if I look at like financials and stuff like that, all right, we have someone that has entered the voice chat. Let's see who we got here. JR2020, go ahead and unmute your mic and talk to us. Oh, he left. Come on. You guys act like it takes such an act of courage to join the voice chat. He left in like 2 seconds. Anyway, all right, back to where we were. So Redfish asked Sonia a question here. How much do you invest in YieldMax to get $31,000 a month? Her whole portfolio is not in YieldMax. She was on a live show before. For whatever reason, she won't join the live tonight. But she was on for like 30 or 40 minutes once, and she explained everything she invests in. So it's not all YieldMax, but she has a lot of different investments. What'd she say? My portfolio, which is 64% in the money markets. Oh, she just answered right above here. 64% in the money markets made $120,000 on these YieldMax types in the last 5 months. My dividends went from $10,000 to $31,000. Well, that's really cool. But what's your cost basis on those YieldMax funds, though? When will they launch high-tie with HITIY? Oh, like a YieldMax fund? I should ask Jay about that. I should ask him if he's going to have a fund on the green stuff. That would be interesting for sure. Okay, so when I look at, look at this, they have tax-effective unusual items, like a company I just looked at yesterday. Okay, so I didn't see any really major things that stood out in a bad way on the financial statements. Let's see, free cash flow is positive. That's always a good sign. Now, Blake said he looks at this from like a long-term investing standpoint, so he's not looking at any of like the short-term fundamentals right now. But I looked at it myself anyway. I like to see at least positive free cash flow. And you can see how they've gone from Well, they were positive in 2020, negative in 2021. This is probably why they had their big drop. 2022, they were negative, but then they were positive in 2023. So you can see they're definitely a big turnaround here. They've moved in the right direction. A lot of these smaller companies, it takes them time to really get rolling, really start up, and get their costs under control. And a lot of times too with stocks, you'll see that the performance of the stock is divorced from the fundamentals. That happens a lot. That's happened when we've seen like major run-ups in the market before, and the revenue and the earnings are not quite matched with what the stock is doing. We saw that early on, I would say, with Tesla. We've even seen that with Apple. We've even seen that with some of the other tech stocks if you go back 6, 7, or 8 years. Let's see. I think I heard her, but this picture looks much younger. See, Sonia, I told you have admirers out there. Her picture definitely, yeah, when I first saw it, I thought the same thing too. I know what you mean. The interview with Defiance was sobering to hear the fund's NAV will decay over time no matter what. Well, it has to. That's the thing. It has to. They know it and expect it. And what I don't understand, like Sylvia said, and this is what I'm having trouble with, because what's the point, okay? If you're in a dividend fund and you have to reinvest every cent that you get just to get a positive return, what's the point? Just buy the index then. So, but, like I say, these strategies and stuff, they get a ton of views on YouTube, So anyway, let's see. MJI says the interview with the... Oh, yeah, I just read that one. FEPI seems good with no NAV erosion. Yes, FEPI is a good one. I got a little bit of it. Actually, if you guys follow the user that goes by Moneyballs in my Discord, he has a model dividend portfolio that is paying him a full-time income. If I go into portfolio comparison, this was way back in February, actually. So let's see. If I go way back, we've had a lot of posts in here. I have to go way, way, way back in here. Let's see where it was. Oh, I'm back into December. I think he posted it in here. Yeah, Moneyballs is awesome. He's one of the best people you can learn from. Honestly, I'm not going to lie, he should be the coach. We're going to have him on as a guest one day, too, when he's done traveling in Croatia and Turkey and all of that. We'll have him on as a guest. Where was that portfolio? I did a portfolio review on it. But anyway, long story short, FEPI was one of the positions for sure. So this is the Rec shares. I'm working on getting Rec shares on, by the way. I've reached out to the same person. Actually, Sylvia knows them too, so Sylvia said she would put in a word. She did email them after we got off yesterday. So you say, let's see, okay, so Moneyballs is a dog, Blake's a great teacher. What about the coach? Is the coach a pretty good teacher too? What do you think? Let's see, Alan Legal, did you ever figure out how the Discord voice chat? I don't know if you know YTSL. I've heard of it before. It's a Canadian fund that is close, same as Tesla. I hold both, and since Tesla reverse split, they are about the same NAV value. YTSL, I think I looked this one up last year. Let me finish the thought on FEPI first. I'm trying to counter my ADD here and stay focused. The coach is mid? Oh, really? Well, I would say this, like on a scale, if we put Moneyballs here at the top, and probably Capital Mindset, and then we put like, some of the others, like the one you got kicked out of, I'd probably lean over here, but probably not at the top. I get that. Thank you, Sonia. Appreciate that. Let's see here. I think Yield Max and Defiance will have to adjust strategy to try to support the NAV more to keep people in it long term. That's what I hinted at when I asked her. That's definitely where I was going with that. I'm like, I specifically asked her, are you guys gonna like change up strategy? So anyway, let's look at FEPI again. Since October, yeah, look at this. We're going up. We're going up, and we are getting a dividend too. So watch this. Dividends. Yeah, this is a good one. We're getting $1 a month. I would give this an A. This is like a top-notch. You know what? Let's look at Seeking Alpha. Let's see what Seeking Alpha grades it. FEPI's top notch, $1 a month in dividends. And then in terms of total return, so price return is positive. If we look at, do they have like an index for just the Magnificent Seven? They should have like some kind of they should have an index just for that. I know YieldMax did the YMAG one. Let's see here. Let's see. Select metrics. I'll go to performance, total return. Oh, you're older than 52? I was going to guess younger. So in terms of total return, 19.43, that's not too shabby at all. Actually, total return's beating the Defiance funds, and it's beating a lot of the YieldMax funds too. Let's see, Dissector says, I want to be an income investor mentally, but it makes no sense for my time horizon. Yeah, well, yeah, you're young, you have a ton of time and stuff. You probably would want to be more of a growth investor, unless, like what I say, if you're in a job you can't stand, which I've been in before, trust me, then these funds appeal to you. So like in the year 2022, when I was desperately trying to get out of my last job, I was doing some crazy stuff like with options and stuff like that, and I was blowing up some trades, and I just like wanted out so bad. Well, luckily, it was like a godsend. Luckily, a new job offer kind of came in at the perfect time, and it happened to be around the time I finished my master's degree, so it worked. But that's what happens. Like if you get in a situation where you're like, I just want out of my job, I want income now, I just want to like take a year off, then that's where these funds, I would say, have more appeal. That's probably how I started getting into some of these too. Yeah, FOMO. REITs. So let me tell you about REITs. So I feel like some of the REITs function like YieldMax. And actually, I have some relatives that put considerable amounts of money into certain... Well, so there are REITs, and then there are what they call... what is it? It's like there's retail REITs, and then there's commercial REITs. BDC is Business Development Company. A BDC is like a commercial REIT. So I know someone that put $100,000 into a BDC, and it paid out like $1,000 a month in dividends, but it's just like YieldMax, or not all YieldMax, but a lot of the YieldMax funds. It pays out, but then you could call it the NAV, or the principal value, keeps dropping. So now it's only worth like $50,000, and then it's paying out maybe $500, $600, or $700 in dividend payouts, or what do they call it, capital return, and it's never recovered its principal value. Now the person has probably made enough because they've been in it now. Shoot, I think they've been in it like 7 or 8 years. So if you do the math, okay, if they're making like $700 a month, that's still $10,000 a year, or $8,400. I'm rounding up a little bit. So in 5 years, it's like they're breaking even. In total return, oh yeah, they got their $100,000 plus some, but it's like the same thing. They could have still just invested in growth. So that's why I say, if you're going to do this, only what I do anyway, I only speculate on maybe 10 to 20% of the allocation. And I'm so glad that, like my 401k, I'm so glad that I have my 401ks, because it protects me from my more risky instincts, because those are all in index funds, and those have done phenomenally. In fact, the index funds probably outperform what I do in my own accounts. Yes, I have done calendar spreads. I've done some. I've been burned on, so I've used leaps that way. So I've done like a long position way, way, way out to function as where my broker recognizes it as the stock. And then I've sold calls against that. So you could call that, like from a calendar standpoint, and from a spread standpoint, it's way out. And I was surprised my broker let me do some of them. Would I recommend accounting, as a profession, as a field? Well, I think you'll always have a job, unless they change the tax code. I think you'll definitely always have a job. So I was more of a finance guy. Like, I took my accounting courses that I had to take, but to me, finance just clicked with me more. I actually found accounting, even though it's just basic numbers, I think like my accounting class, the financial accounting that I took as an undergrad, I think I just didn't like take it seriously and didn't like do some of the like assignments and stuff. And so I just kind of breezed through it, but I found it a little harder than like finance. So I feel like accounting is counting the money. Finance is actually growing the money. I find growing the pie more fun than like writing down what's in the pie, so to speak. Like growing it is like the actual active fun part, and that's finance for me anyway. Let's see. Everyone finds what makes them the most. They keep doing it. Sonia, my favorite CEF is CLM because it drips at NAV and has 21% return. Let's see. I think Redfish likes you, Sonia. But he's got to get in line behind me. Mortgage and equity REITs. Let's look at CLM since there's a certain other channel always talks about CLM. Yeah, Cornerstone. I should talk about this one more. It'd probably boost the views. That's what that one guy in the other Discord was mad at me about. He's like, oh, he talks about his views and stuff. Is he sincere? I'll let you all be the judge of that. Okay, let's look at CEM, or CLM in total return. Over a year, 18.68%, not terrible. Like you're saying, it drips at the NAV. Do you want to explain to the audience, for people that don't know, explain dripping at the NAV, just for, I'm sure there's people on here that don't quite know what that means. Okay, mortgage and equity REITs. Buying the underlying and selling covered calls yourself is probably better in the long run for people that really want to get both appreciation and income, unfortunately. Well, that's what Moneyballs and the others, that's what they're doing. What BDC was it? Oh, what's it called? I think it merged with somebody else. I think I can go check it here. I'm not going to pull it up on my screen, but I can go check it. It was something that, it was probably good for the 5 or 10 years before the person got into it. But then something changed. I don't know if the business changed or like the strategy changed or what happened, but it just got to where it wasn't like as good as it was, if that makes sense. It just, the returns completely changed, and then it had to like merge with something else and restructure, and it was really kind of a mess. So I used to work for financial advisors, and they pushed a lot of these products like mutual funds, BDCs, stuff like that, which really turned out to be crap in the long run. I'm still in like one of them that I'm going to get out of, but it's amazing because it's a large cap fund, and somehow in total return it's like massively underperformed the large cap indexes because of their fees they charge. So retail funds charge massive amounts of fees. That's one of the reasons why I just could never be a financial advisor, because for one thing, I don't like just selling. I don't want to be like a salesman. I want to like use my brain in a role and stuff and actually do something that's intellectually fulfilling. And just selling the same kind of crap products over and over again, I don't find intellectually fulfilling. Okay, the REIT or BDC in question is called FSKKR. So that is this one. And look at me here. I'm pulling up my calculator instead of my stock app. And I've only had one drink. KKR, let's see. So the last year, I'll pull it up. Why am I doing this? Let me just pull it up here. KKR. This is it. It's KKR. So in the last year, here I am bashing it. Look at that. It's up 100% in the past year. But the thing is, my relative that's in it, they put $100,000 in it like 8 years ago, and it's worth $49,000 right now. So let's see. Something's off. Hold on. Maybe they got in. Oh, here's what happened. This is strange. So I think KKR actually bought up the BDC that the person was in. See, it was way up here, and then it dropped. And then, I know what happened. It did a couple of reverse splits. This is a great example, by the way. This is, shoot, if I can take a screenshot of this without, I'm gonna do something here I don't normally do for just the average person here, or the average people. I'm going to take a screenshot that's not showing any account numbers or anything. I'm going to put this in Discord. What thread can I put this under? It's certainly not a great trade, so I won't put it there. Heck, I'll just put it in portfolio comparison. Let me do this. Okay, so this is like something I normally wouldn't do this. I'm gonna post the numbers, not anything to do with the account or anything. I'm just gonna post some numbers here because this is actually a good example of how a reverse split like takes your money. So in Discord on my other device here, I'm gonna post a screen of this fund here. And here we go. The point I want to make. Here we go. All right, so I just put this in Discord here. This is the BDC that I'm talking about. Okay, so if I go to, I really like doing this way. This is working out really well. Okay, so let's see, under portfolio comparison, if I go down here. All right, this is this BDC. It's called KKR. So what happened, I think the person had like 10,000 shares at one point or more. I'll have to go back in the statement history, but it reverse split a couple times. So what happened is that the person lost like over half of their shares. And while the fund is up, this is a great example of reverse split. While the fund is up, you can see in total, not total, but in dollar value, they started out with $100,000. They're down to basically 49,000. So yeah, they've gotten, let's see, over 7 years, they've probably gotten 70,000 in dividends. Okay, so from a total return standpoint, that's still, they've made, it's 19% in total return over a 7 or 8 year time horizon, which is not great. That is not great at all. That's what, $2,500 a year? You can get that in CDs. So the person could have just got CDs, and that would have been, let's see, say you're getting 5% in CDs over 8 years, compound that times 100,000. That's you would be at 147,000. So there's no question at all the person would have been way better in CDs. This is like a yield max example, honestly, but this is a commercial REIT. Okay, let's see what we got here. Not at Schwab anymore. I owned it since 2014. Dripped for the last 7. I sold last August fearing a hideous October. We did have a hideous October. And plan to buy back, but need to get another account at Fidelity. Do you just regular swing trade? If you're good, can you make more than dividends? I absolutely think you can. In fact, look over here. Look at the wheel strategy over here. Look what these people are doing here. This is a benefit to joining my Discord, by the way. Shameless plug. But no, it's really valuable information here. Watch this here. All right, this one guy here, look at his account. He's made $26,000, and we're not even 3 months through the year. What kind of a job do you make that kind of money at? So, yeah, that's awesome. Have you noticed the premium is at its lowest it's ever been for Cornerstone? Yeah, I see that. I prefer to hold the base stock and sell calls as well as leaps and sell calls. Just different management needed for in-the-money situations on the calls. Let me read that again. Prefer to hold the base stock. Sell calls, I agree with that, as well as leaps and sell calls. Just different management needed for in-the-money situations on the calls. Do you know any conservative calendar spread strategies to make income? I wish, if I wasn't sharing my screen, I would go pull up E-Trade right now. I don't know if I would call this conservative, but you can make a good premium on doing cash-secured puts on Marathon Digital. I made like $1,200 on this last week. So it's at 20 right now, so it ran up a little bit. But if you can go close to the money, you'll make a juicy premium on it. And if you do want to own this, you can own it and get a decent premium for a cheap price. Because if you did have to buy the stock, if you had to get it signed at that price, say you did 10 contracts, you could make $1,000 in premium on 10 contracts. But you would have to own like $20,000 worth of the stock. So, E-Trade, you want to get me going on E-Trade? Do you think a SMCI split would help them out? It would help me out. It would help me get into it. It would probably help them out, yeah, because it would get them more investors for sure. I'm having FOMO with this one. This one, I don't know, it's kind of dropped a little bit, hasn't it? Did you sell any of it, by the way? So from March, it's dropped like $200. Maybe I'll buy in. So E-Trade, all right, this is a long rant coming here. E-Trade was like the first broker that I used because I actually, in my line of work, I had to get approval for my trades and stuff. So E-Trade was on the approved brokers list. This is back, and this was only like 5 or 6 years ago, maybe 7 or 8 years ago, but when they still charged a fee for trading. they were charging, at the time, they used to charge $9.95 for trades. And the deal through my work, it was like $5 per trade. So I used E-Trade. They used to be great. Okay, they were so good. Their customer service was so good that I used to move money like every paycheck when I first started investing. I was really a growth investor, and that's where I first started finding 2, 3, and 4% dividend stocks. And I was excited back then at making $3,000 or $4,000 a year. I was like, wow, this is like dividends coming in. This is like passive income. And it was on stocks like, Verizon, AT&T, Blackstone, stuff like that. But anyway, so E-Trade was great back in the day. They were so good that when I moved money one time, I moved money before a paycheck cleared or something, and I ended up getting a overdraft fee from my bank. And I called them and I told them about it, and they credited me for the overdraft fee, which was not their fault. It was my fault. And they're like, oh, no, we appreciate you as a customer. And they paid for my overdraft fee, and then, didn't tell them this, but my bank actually waived the overdraft fee because I went and basically said, hey, waive this fee, and they did, because I'm just good like that. Actually, I'm just kidding. They do it as a courtesy sometimes if they like you. If they don't like you, they say, get out of here. But if they do like you, they'll waive it once or twice. But if you keep doing it, they're not going to waive it. Anyway, long story short, so they did that. They paid my overdraft fee, which I said, wow, that's awesome. Not only that, but they used to have, you got free access to what they called S&P reports at the time, Morningstar reports, which you could go and look at, and they had a fair value estimator where all the work was done for you. You could look at five-star funds in terms of undervalue versus the analyst ratings and all that. All that was included in there. Anyway, needless to say, over the years they declined. So around the time of the pandemic, their customer service sucked. I started calling, and I was getting morons on the phone. I was getting people on the phone that didn't even know what the drip program was. I'm not kidding. Their knowledge was drip. Oh, you mean because it's raining outside? I'm not kidding. They were that dumb. And so I started thinking, I'm I'm gonna need to pull out of here. But anyway, so then I got options approval, and then I got the account elevated to options level 3. And some of the trades I was doing that I was hinting at, because I desperately wanted out of my last job. So I was starting to do some of these really aggressive trades for premium. I was trading Mercado Libre and stuff like that, which I did some videos on 2 years ago that are deep into the video history, but probably embarrassing now. Sometimes if I watch some of my older videos, I'm oh my god, that's just cringe. But anyway, I think everybody kind of reacts that way to themselves. Somebody else might watch it and say, oh, that's awesome. Who knows? I've seen stranger things. But anyway, so when I did some of these trades, they flagged me. I think they thought it wasn't me doing it or something. So I ended up getting locked out of my own account somehow. And I was pissed. I was furious. And so I'm calling them and stuff. And then they're talking to me they're not friendly at all. And then I had to talk to somebody. I had to go through all these hurdles because I actually I had sold off some stocks and stuff. I was paying a good chunk of my house down, and they held me up. These idiots held me up for a whole month on that. So when I started my new job, I had to use a different broker. So I went to Ameritrade, and I was screw E-Trade. I'm done with them. Well, I still have so my relatives still have accounts there and stuff. I have one account that there's not much left there anymore, but I like some things about them. I like their options portal. I like how it lets you play around, and I'll do this on a live show. I would do it today, but I'd have to log into my account. But I keep that one so that I can still use that because they have you can play around with some of the spreads and stuff like that. But I thought Ameritrade was the best broker I ever used until they got dumped off to Schwab. So I still have thinkorswim on here, which I use thinkorswim to backtest options trades, which Schwab kept that one. Schwab I'm not a huge fan of. I would rank them better than E-Trade at this point, but like I said, the customer service with E-Trade really fell off. Schwab, they made me wait 5 days for my money to clear when I was buying into... I bought into some SQY and Coney. So they made me wait on that. But anyway, I try to use all of them. I really like Fidelity. Really loved Ameritrade. Schwab is okay, I guess. Let's see. Sonia says, I made a lot of money in CDs when younger, very high percent, 5 years, roll them over at different banks, not brokerage CDs. So Sonia, you say the same thing like that my dad says. Like, and this is, so there. Here's the thing. There, and I think we talked about this on the live stream, which for whatever reason you won't join this time. Which I kind of miss. I kind of miss, the live voice chat. But anyway, so you got real return and you've got nominal return. They teach you this like in economics. Nominal return is your like total dollar return, right? Your real return is what is important, what's really important. So what that means is that if inflation is 9% and you're getting 5% in a CD, your real return is actually negative 4%, which means your dollar is not keeping up with inflation. So the value of your dollar is eroding faster than what a CD is paying you. So as an investor, you want like a positive real return. Okay, so I get back in the 80s, the CDs were like 18%. Mortgage rates were also 18% because the Fed funds rate, which is the base interest rate in the economy, everything's based on, right? Okay, so the CDs, and that's awesome, by the way. So the thing you want to do with that, you compound it. So the way to you compound it and you get the magic of compound interest. That's how you beat inflation with that strategy. But the thing with CDs is that, okay, yeah, they were paying a much higher interest rate back then, but interest rates were also higher. Same thing now. Interest rates over the last 4 or 5 years, especially over the last 3 years, have gone up astronomically. So has the rate of return of CDs, which is still not keeping up with inflation. That's the thing. So you say, that's why I need yield max. Well, yeah, I mean, you're getting the dividends there, but I would think that some good growth stocks like the Mag 7 and stuff like that, you're going to get your best total return in terms of those, and some index funds and stuff like that. So I would say, instead of saying that's why I need yield max, you should say that's why I need the coach, right? Just kidding a bit. E-Trade recently merged with Morgan Stanley. That was a disaster too. All the account numbers changed and stuff. The customer service has been top notch. Oh, I might have to give them a shot again. So maybe they got better. Love the return on capital in CLM. Mag 7 from Roundhill. Oh, Mags. I like that. That's kind of a cool sounding name, Mags. Roundhill. Ooh, we got to talk about this one with them for sure when they come on. You know what was funny? So when I had Shang on today, he told me before we went live, he's like, "Oh, we're big fans of your channel," and I was like, "Oh, really? Well, like, were you guys watching me before?" No, and I guess they checked me out when I reached out, but I kind of thought, because I saw in some other Discords, which is funny. I won't say which Discord it was, but it's another YouTuber's Discord, and so it's pretty easy. One of the most fun pastimes you can do, and this is especially fun for a content creator, and it's so amusing to go read about yourself online. Go read about yourself online from people who have never met you. So another YouTuber's Discord that I went on, I read all these comments from my November interview with Jay, which for whatever reason a lot of people thought that I didn't press him hard enough, or that I didn't know what I was doing, or I had some kind of deer in the headlights look, which I have that look kind of naturally anyway. It's not always real. I wouldn't say it's an act, but like, I guess I'm not as dumb as some people think I am, but the comments I got on there, it was funny because the other YouTuber, and here's the funny thing, they've since deleted them all, but they were saying, yeah, I don't know why Jay keeps going on that coach guy's channel. Like, you would think he would go on, like he was saying, my channel, meaning him, or a few others. So I was kind of laughing at that because I have a thick skin, and there's a couple of, like what I've seen, there's other YouTubers that go on there and try to promote themselves and stuff like that, and a couple of them were like just completely trashing me. And the one of them, and I'm not going to say like names or who it was or anything, but one of them, I went onto the channel and watched it, and he had probably like, half the subs that I have and stuff, and I watched his video and I was like, okay, this guy's trashing me, alright, fair enough. And so I went on there, I subscribed to him, and I just said, nice video. And then I DM'd him, and because he said that I was like, and I don't want to go on too much of a rant here, but he said, oh, that coach guy, like, he's blacklisted. And so I messaged him, I said, hey man, like, what's your beef with me? I just want to know. And then so when I DM'd him, he's like, "Oh, no, it's no beef at all. I just, was talking out of my ass." I said, "Oh, okay, that's interesting because you said I was blacklisted." Anyway, long story short, everything's all cool now. But I was trying to go back in one of these and find some stuff, and I noticed it's all been deleted now. So I just found that amusing. Moral of the story, though, it's fun to read about yourself from people who've never met you. Anyway, okay, let's see now. Where were we? Inverse, Mag 7. I don't think it's inverse. No, because it's going up. Redfish loves ROC. Schwab said they're switching to one-day settlement period starting in May. Oh, that's cool. E-Trade. Oh, yeah, I read this one. Do you love VICI? Let me see. Do I love VICI? I don't know, honestly. Signs point to yes. So apparently I do. See, the 8-ball knows me better than I do. Vici Properties. Yeah, I'm glad you mentioned this one because I've been wanting to look at it for sure. So let's see. Since 2019, we're up 21.88. We're up like $7 from there. And let's see. We pay out. Let's see. Beta is lower than average. So average beta. Beta is supposed to be a measurement of risk. So it's lower than 1, so that means it's less risky than the overall market. Dividend yield is a 5.69%, so it's got a stable dividend, and it goes up. I like that. Let me go look at historical data. Let's see, like the dollar dividend amount. It's a 42-cent dividend that it paid last month. It pays. Does it pay quarterly? Yeah, it does, because I see September here. Okay, so then if I go look at financials. Let me look at financials. What does Sonia say here? The brokerage CDs are parking places now, but probably will be over this year. I'm slowly coming back in the market. That's why SCHD and JEPQ are coming into play. You're funny, smart, and more. Oh, thank you. I love to hear that. If you ever want to meet for dinner, I'm still open to that. Just kidding. Been with Schwab since 1993, never had another broker. I have 3 retirement accounts taxable. There are some that also look smarter than they are. That's true. It works the opposite. It works the opposite. So, yeah. I would say I'm very situational. I'm not, I'm certainly, there's a lot of people out there that are smarter than me. There's people that are dumber too. It's like a spectrum or a scale. But I'm situational. Like when I need to dial it up, I can. I just feel like sometimes, I don't know, I have a lazy side. That's why for 6 months I wasn't posting as much as I could have been. And some of these other channels came out of nowhere, and it's like, wow, look how big they are now. Okay, anyway, so as far as, let's see here. There's that tax effective unusual items again. Watch somebody come in. So one fun thing to do too, take the personality test, because you'll realize everybody's different from a personality standpoint. You're going to find like there's people you click with like that, and there's people that, man, they just don't get you at all. And I run into that a lot. Like there's people that it's like it's either hot or cold. There's no in between. It's like we either like click or, man, they just don't get me. And some personality types, like when I'm reading that statement, I could see somebody saying, he keeps talking about like this tax effective unusual items like he doesn't know what it is. Doesn't he know? Hasn't he studied accounting? Like I could see somebody saying something like that. But anyway, let's see here. Free cash flow. Ooh, free cash flow looks awesome. We've got, and look at this, we're growing every year. Now we stayed, trailing 12 months because they haven't updated it yet. I was going to say, how is that possible? We're identical here over the last 2. Let me look at quarterly. Okay, they went up steadily each quarter of last year. They went up. That looks awesome. So Sonia, I would recommend, well, I don't recommend anything, but I like Fidelity a lot. Fidelity's really good. They have a lot of their own like in-house funds that are zero cost, and I happen to like those a lot. Let's see. Okay, I read that one. Okay, it looks like the comments are starting to stall here. I went a little longer than I was going to here. Sonia, oh man, Sonia, you're just really flattering me here with all these positive comments here. Don't let this go to my head now. You know, keep me in check. You're turning into a stellar interviewer, as letting the guys talk in a very gentle but prodding way is good. Well, there was a little method to the madness there. So in full disclosure, for the Curve interview, I would say I probably wasn't as prepared as I should have been, but I liked it because he would take a question and run with it. So he could talk for a good solid 3 minutes, and then I could go in my head and come up with a quick other question and then ask it. And so yeah, it was a great pace to that interview, and he gave really detailed answers, so I really enjoyed doing that. And I'm really intrigued. So he teaches finance classes at UNLV, University of Las Vegas. He teaches a class on like derivatives and stuff like that. I would be fascinated. They didn't offer that in my finance program when I took it, but I would be fascinated to take a class like that. He had a quantitative finance certification, so he's like an expert when it comes to options and stuff like that. So that makes me feel very reassured if I'm investing in something like that. That makes me feel like really reassured. He definitely knew his stuff. So anyway, all right, you all, thanks so much for tuning in. It's been real, it's been fun, but now I gotta run. Like, comment, and subscribe. Oh, and by the way, check out tomorrow. I'm going on an interesting podcast tomorrow. Let me just show you all that really quick. Let me do this here. I think I have YouTube up over here. So see what I did here? I'm trying to get a little better with the Seeking Alpha's quant system. Yeah, they're great. Let me plug the show I'm going on tomorrow. Let's see. I wanna give a plug for where I'm going tomorrow. Your buddy here, Ryan Dingler. I want to give a plug. Let me see, where is this now? Okay, so if you read my community post over here, let me go to my channel. Oh, this is weird. Let me go to my channel real quick here. Okay, so I'm going on the Cashflow Kings podcast tomorrow. I actually don't know if you all should watch it because we're probably going to get into some of the YouTube drama and stuff. But anyway, yeah, so it's two other channels, the Ryan Dingler Show, Fiscal Philosophy, Cashflow King. So yeah, we'll be on there tomorrow, so definitely check us out. It'll be 8 o'clock p.m., and then he's going to come on our podcast in another week or so. So yeah, we will be on for that. So all right, thanks everyone for tuning in. Like, comment, and subscribe. We will see you all tomorrow. Take care.